again. So a lot of these women-led households and women-led businesses will need a lot of support. And the reports that you highlight from FSDU is very critical in allowing us to understand the magnitude of the problem. But where I sit as an economist, I anticipate that the problem is significant, and we need to design specific interventions to provide money, to provide capital to the women-led businesses and households to allow them to kickstart or restart their economic lives, because that is how we will be able to build back individual resilience, but also country-level resilience. So it's an important aspect that we need to be thinking about. We cannot fully discuss it in this 1 hour session, but I believe this is a matter that a lot of other regulators and authorities are really picking up and are designing interventions in that line. The Capital Market Authority has recently signed an agreement with the FSDU and the EU in Uganda. It's called the Deal Flow Facility. And this Deal Flow Facility is going to be targeting to develop and harness, grow SMEs, young businesses, innovators, and allowing them, providing them with the capital they need to survive the 3 early years of a business growth. And this Deal Flow Facility is going to be very pivotal in allowing the economy grow back and grow back better, in the words of President Biden. Thank you very much.
Wait, he is the head of reserves management at the central bank, that is Bank of Uganda. Many thanks for that submission. Let me also bring in Mr. Aiko Ongodie. He is the CEO and founder of Zeno Investments Management Uganda Limited. Now, Mr. Ongodie, here's another study that was conducted by FSD Uganda. Now they said the risk of over-indebtedness might increase. Over 15% of the respondents who were surveyed, they say that they actually did borrow on digital apps. And 23% of those same respondents couldn't pay the money within 14 days. So the risk of over-indebtedness seems to be increasing. The fact that people are borrowing more than they are saving. And on the show here, we are telling them, please, save more with the CIS or with the investment clubs. But then it seems like people are borrowing more and more and more to make ends meet. So essentially, when we say financial resilience, what exactly do we mean? And how can the investment industry help us build the same resilience?
Thank you. It's perhaps interesting to complete the sentence.
Indeed.
Build up resilience against financial shocks.
Indeed.
Yeah, so that's the context.
Indeed.
Yeah? So every individual experiences shocks. Your aunt gets sick, you know how it is in Africa. Your aunt gets sick. Your aunt gets sick and you're asked to pitch in.
Indeed.
Your mom gets sick and you're asked to pitch
Indeed.
in. And so we do know that, again, I will just stress this back, you earn some income, you save some of that income, but very, very importantly, you need to invest that income.
Indeed.
But our perspective, and this is what we do at Zeno, help individuals execute a goal-based investment strategy. Help individuals, first of all, plan, save, and invest for specific goals. So I say goals because every person has different goals. There's emergencies, there's medical, there's building a house, there's retirement, there's taking a child to school. All of those things that are listed there, many of them take place in the future. And so in order to be able to finance those goals in the future, a lot of the time you actually have to actively save, but very importantly, actively invest those savings for those future goals. So it is just identifying what are these possible goals. When we're talking about what are these possible goals that we will need resources for? And instead of thinking, okay, those goals, taking a child to university, I'll use my future salary to do that. It might make sense to start saving some of your earnings right now and investing those savings towards that goal, rather than 5 years down the road, 10 years down the road, anticipating income, anticipating income, which you might or might not have, or even if you do have, you might or might not be enough because university education or anything like that will become increasingly expensive. So in terms of building resilience, is think of your your future goals. What are these? Of course, you'll need, like Alan had said, you need some money for emergencies. You'll need an emergency fund. But you might also need an education fund. You might also need a retirement fund. You might also need a house fund, so to speak, or a medical fund. There's many ways to do. So just breaking. So this is how, and this is how the capital markets can help. And so once you put aside those savings, you've sort of, and we typically do this at Zeno, we help you sort of break down those goals and then estimate for you how much you need to save. Of course, the goals are many, but there's a very neat way we can sort of break it down and say, for your retirement, save this much. For your emergency fund, save this much. For your child's education, save this much. So you have different pots, so to speak. And then deploy those pots in financial instruments in ways that are appropriate for those specific goals. So those are some of the steps. In fact, we're doing some work with the FSD Uganda, as you mentioned, to essentially focus people not so much on the returns that they generate from these financial instruments or the capital markets or whatever, or these businesses, but focus their minds on the goals that they will need to meet in the future and then save slowly towards those goals.
Very pertinent conversation we are having on how best we can rebuild resilience in a post-COVID-19 environment. We're talking about a capital markets authority perspective. I have Aiko Ongodie, I have Saraka Turamo, I have Dixon Sembuya, and I also have Alan Reteba. 4 panelists with whom we are expounding more on this conversation. Saraka Turamo, let's talk about some of the assets that are available within the financial market where one can save where one can invest their savings. Okay. Yes, what are some of those assets in the financial market where I can, as Romy Busiku, invest my savings?
Okay, just because I, at the risk of sounding like a broken record, I will not get into the collective investment schemes. Yes. These have been touched. So I will just give you...
You could briefly, because we are trying to woo the people from the investment clubs, to forego the fact that they also have their own leadership, they can expedite their own business activities or modules, but then they could go for the CIS. As Romy Busiku, I could be busy with this show, and I can not, undergo that business activity, but then I can go for a CIS manager who can handle the business on my behalf. Okay. Go ahead.
So since they had mentioned that the collective investment schemes pool funds from different investors, people who can put aside some little money, they pool funds and then invest in I'll give an example, the traditional asset classes.
So why should they go for them?
I'm just going to briefly touch on which asset classes these are.
Yes.
So they can invest in either the debt market or the equities. So for debt, they can buy bonds from government, as stated as government securities. These bonds are either on the short end or the long end.
I see.
So depending on your need or depending on where the yields are at the time, if you need to lend money to government for a short amount of time, you can invest in treasury bonds. Yes. And these have tenors of about 3 months, 6 months to a year. And then the bonds have tenors of about 2 years, 5 years, 10, 15, and 20 years currently. The equities market on the Ugandan Securities Exchange, we currently have about, I'll say, 17 stocks, 9 of which are domestic companies, and then 8 are cross-listed stocks. So all these are different assets that the collective investment schemes do invest in. And then just a little, just for me to touch on other assets that are available, although not too common in our market. We also have corporate debt. Why I want to highlight this is because it could be important for business enterprises to have a different option of non-bank financing. So they can issue these papers which are termed as, we have commercial paper and we have corporate bonds. The commercial paper would help you service short-term funding needs. Let's say you're a business and you're trying to raise money for your working capital. You can issue commercial paper and be able to borrow cheaper than you would from the bank.
Yes.
But you're borrowing from the markets. This is why it's very important for us to save, because you're not only helping the individual, you're also helping the broader economy. these businesses as well. And if they have, let's say, a new project or a new product line that they are trying to finance, they would issue corporate debt. And these are the longer term tenors of the bonds.
All right. Let me also bring in Mr. Dixon Sembuya. He is the Director of Research and Market Development at the Capital Market Authority. Mr. Sembuya, a very good morning once again. We'd like to know to what extent does the investment regulator, we're talking about the Capital Markets Authority, actually go ahead to support the individual's efforts to build resilience at the personal level? How does the CMA, help the individual build resilience at the personal level?
Good morning once again. Thank you again for having me on, and thanks to all my colleagues for breaking down and unpacking some of these concepts that members of the public at times find a little bit difficult to grasp. But I think before I go directly to your question, just allow me to also unpack a few terms, and some of the terms I'd like to unpack include a bond. Okay, a bond is simply a loan from an individual to a company. And so once you give this loan to a company, in return you get interest, and at the end of the term of that loan, you get back your principal. So my colleague Sarah, when she talked about government bonds as an example, she simply meant members of the public lending to the government and in return getting an interest. And at the end of the term of that particular instrument or bond, they get back their principal. I think there's also a term, equities. Equities are simply shares, and a share is a unit of ownership. It represents a unit of ownership in a company. So currently we have, she talked about the companies that are currently listed at the Ghana Securities Exchange, and among them are 9 domestic counters or companies. So ideally, as a member of the public, you can purchase part ownership, or you can gain ownership in those 9 listed counters or companies by buying a share, which is a unit of ownership in those particular companies. Now, turning back to my question, how is the regulator helping in as far as building financial resilience is concerned? One, what we believe is that an informed public, okay, once you're well informed, once you're aware of the different investment products that are available, then you're in a better position to make sound financial decisions. So as one way of trying to build that financial resilience, we're engaging in public sensitization exercises. And this webinar is actually part of that campaign of trying to raise awareness. So you have an informed public, and once the public is better informed, then you do expect that sound financial decisions will be made, and as a result, people can build back better. In addition to that, the Capital Markets Authority is a government agency charged with developing and regulating Uganda's capital markets. So we are a regulator, and being a regulator, our core mandate lies in protecting investors. Our core mandate lies in ensuring that those who provide these financial products are actually regulated, they're licensed, approved, or authorized. We undertake background checks on these individuals. We vet them to ensure that they are sound before they provide these financial products or financial services to the public. So as one way of ensuring that people build back that resilience, or the public builds back the necessary resilience, we ensure that those playing within this particular space are regulated, they're known, we've done background checks, and once people start saving in order to build back their resilience, they're protected, or their savings are protected. And we've come out time and again to caution Ugandans against unlicensed, unauthorized, unapproved, and unregulated products. And usually during times of crisis, when you have a crisis, people are desperate. People are looking for ways of, generating a return, generating an income. It's easy for them to fall prey to unregulated schemes, unapproved schemes. Okay, so we always come out And we've come out strongly, urging members of the public to ensure that they only deal with licensed, authorized, approved, and regulated players. They only deal in products that are licensed and approved by the Capital Markets Authority. And the beauty about dealing in a regulated product or saving through a regulated product is that in the event of anything, then you have recourse. There's recourse for you as an investor. The authority can take up your case with much more ease if the parties involved fall within its regulatory ambit. But in the event that they don't fall within the regulatory ambit of the authority, then it gets very difficult to address issues. So it's important that you invest in a regulated product as you try and build back your resilience. We're going to continue educating members of the public. And we hope that we'll pull through this particular health crisis that has morphed and evolved into some sort of crisis with an economic bearing.
Well, thank you very much, Dixon Sembia. He is the Director of Research and Market Development at the Capital Markets Authority. Let's also bring in Alan Wetaba, the Head of Reserves Management at the Central Bank, Bank of Uganda. Let's talk about the importance of saving and investing. Yes. Very good morning once again, Alan Wetaba. Are you live with us? Yes, Alan, what are the key lessons that this pandemic, COVID-19 pandemic, has taught us about the importance of saving and investing? Mr. Alan Wetaba.
Yes, I am. Thank you very much for that question. If we go back to our topic for today about building financial resilience, it sits at the heart of what we are discussing today about saving, but it's not enough to save. For you to build your resilience, you need to be able to invest at the same time. So there is always two decisions that need to be taken. There's a decision to set money aside from your monthly income. Set some money aside. The Bible recommends 1/10 of your saving for tithe, but another 1/10 for saving. But what happens to the 1/10 that is available for you, or that money you have set aside? The next decision you need to be making is investing that money. If we recall the parable of the 3 talents, the master was not happy with the servant that was given an asset to manage and did nothing. So it's important to balance setting money aside and investing it. Investing it is what makes your master happy because it allows money to grow faster. It allows you to accrue interest. And even the Bible is actually very interesting. The master highlighted that he was unhappy with the servant that kept the money and did nothing, because at a minimum, the servant could have given this money to money changers to earn an interest, which is very important conversation for us in this day and age, that still the Bible and even us today, we still recommend that individuals, families, and households, if they must set money aside, and when they set money aside, they should provide it to a professional, a money manager, a licensed manager, who then is able to grow this money faster. As this money grows, the individual, the family, will be able to increase their resilience because they will be having more and more money and more money set aside for future disruptions, for future unforeseen expenses, and these will be easier to manage the next time around. And that's the importance of balancing savings and also bringing on board investment. And so we are happy. A lot of our members in the CFA Society are professionals. A number of our members are licensed, and they are capable and able to advise individuals, institutions, pension schemes on how and which avenues are available for you to invest in going forward, and how best do you protect your money, but also allow it to grow in a more functional, logical manner. Thank you.
Alwetaba is the head of reserves management at the Central Bank of Uganda, and we are talking about rebuilding financial resilience in a post-COVID-19 environment. What are capital markets and how can capital markets be used to ensure resilience building within the citizens of our country here? How can we reduce on the losses that have been incurred since the onset of the pandemic, and how can we ensure growth of the savings all the same so that our individuals in this country can build resilience? Let me also bring in Mr. Aiko Ongodia, the CEO and founder of Zeno Investment Management Uganda Limited. Let's talk about the Ponzi schemes. Wow. Ms. Aiko, many people are falling for these Ponzi schemes, which promise higher returns. What are we going to do about it?
Excuse me. So, so that's a very important question. And there's many ways to answer it. One way is just remembering, typically when you have some money, that you need to put to use, who do you ask for advice?
Yes.
You ask your brother. You ask
the nearest person in your vicinity.
The nearest person. You ask your sister. You ask your mom. You ask whatever. Yeah? But do they actually have the experience, the training, the expertise to advise you on how to invest that money?
The goodwill, yes.
Sometimes,
the expertise,
the goodwill. Their heart's in the correct places. Yeah, but they might not actually be giving you the correct advice.
All they'll say is go for it, go for it.
Yeah, go for
egg
it.
You on.
Yeah. Oh, I hear there's an expression in one of the local languages. Yeah.
There you go. All right.
So it's very important to know who are you taking this guidance from?
Indeed.
Who are you taking this investment strategy? Who are they qualified? Do they have the experience? Okay, these products that they are proposing to you, do they actually make sense? When a person says, oh, you can earn 10% per month. Okay, very, very important. And I'm going to make the second point. So first point is ensure that whoever is giving you guidance actually has the professional. Of course, the heart is in the correct place, etc., but actually has the professional competence to give you that guidance. I would advise, typically, if you don't, if you need guidance about how to save for your child's education, how to invest your lump sum that you've acquired, use a professional, licensed and regulated investment advisor, investment manager, licensed and regulated by the Capital Markets Authority. The second thing that I want to make in regard to Ponzi schemes and the like, usually people make investment decisions based on returns alone.
I understand.
That you only, if you have an asset A that earns you, say, 20% per year.
I hear that.
And then asset B that earns you 15% per year. The normal person, the average person, like you and me, about 1C, yep. The ordinary person, not the ordinary person might actually say, give me the 20% per year. It's the better one.
I see.
But you've only used half the information you need to make that decision.
That's where the CIS manager comes in?
This is where an investment professional comes in. Because the asset that's earning 20% would be the preferred asset on condition that both assets have the same risk. If they two have a different risk, the decision is slightly more complex than that. So that's one thing about that. The third thing that I want to make is, but what is a normal return? So if you have some money that you want to put to work, you want to invest, yeah? There's something called a risk, in every country there's something called a risk-free asset. So a risk-free asset is typically the benchmark that you reference every other investment opportunity to. Because it's a risk-free, remember when you're investing, you're taking money that's already in your pocket.
Indeed.
You're taking money that's already in your pocket, pulling it out and then risking it. You're undertaking risk. Yeah? So you need to be rewarded for it. But if you're able to get an asset that has no risk, what would the return be? The typical asset used in most countries is the one-year treasury bill. So if I want the audience to take away anything from today's discussion,
sharpen your ears.
What is the one-year treasury bill yield? That's the risk-free return.
I hear you.
Anything else that you're going to invest in is riskier than that, and so should reward you relatively higher than the one-year treasury bill.
Yeah. Let's talk about risky investments. The people in the investment clubs, they have their own leadership, which helps them make the investment decisions. So they invest in real estate, which has largely been hit by a 30% rental income tax. So the landlords are grappling. They've been hit in the transportation sector. You have an inter-travel ban, so they've been hit and they're losing money. You also have the agricultural sector where they invest money, and the inter-travel ban is also affecting agriculture. Don't you think these investment clubs would have been in a better position if they had employed a CIS manager to help them make a better investment decision?
Robbie, let me sneak in to complete an answer about Ponzi schemes. So a lot of people chase returns instead of chasing the goals.
Yes.
Why are you investing? Instead of chasing, just remember you're investing for your child's education. Focus on that. And what do you need?
Not the returns.
Not the returns, because returns, the decisions are slightly more complex to make when only returns are used. But then let's go to your, so that's why people fall for high earning, supposedly high earning Ponzi schemes a lot. And so it just remove the focus from the returns and focus it on the goals might help in some way. Investment clubs that, so the regular investment club is formed in a bara, you guys meeting and you're happy. We all earn some money. Let's put together. Let's chuck in something every month, etc. But then, of course, that's the feel good phase.
Yes.
Where the rubber hits the road. Now you've chucked in some money. Now where do you deploy this money? So a lot of people, a car wash. People make money in the car wash. But then grains over there in Sironko or whatever it is. There is a grain trading thing that you can do a margin of 60%. And so you find people that are regularly employed have their main source of income is a regular job or some regular business, are now getting involved in grain trading, in car washes. Of course, it is okay. I mean, absolutely somebody needs to do that. But a lot of the time, these enterprises have significant supervisory effort that is required in order. Farming.
And time, yes.
Yeah, farming. Time. And a lot of these people don't have
They have
time.
side businesses.
They have their regular jobs. And you can't run that. This requires quite a bit of time, so it becomes very, very inefficient.
That's where you come in.
This is where an investment manager that executes these investments, giving you exposure to a broad range of assets, comes in and executes those using unit trust funds. One of those investment managers is Zeno Investment Management.
Indeed, so if you need any financial insights on the same, look for Zeno Investments and Management Uganda Limited. Also look for UAP Old Mutual Financial Services Limited. You also look for ICAA Asset Management Uganda Limited. Also look for Sanlam. Also look for Britam Uganda Limited. All those are the certified, 5 of them, certified CIS managers in Uganda, courtesy of the Capital Markets Authority. Let me also bring in Ms. Sarah Katuramo. She is an investment analyst with Jane Africa Asset Managers. Yes, a very good morning once again. Is it afternoon already? It's midday, 1 minute past. A very good afternoon, Sarah Katuramo. Let's talk about recommendations. Would you recommend a loved one to invest?
When you say would, it's funny because I feel like it's all I do. My family can attest that I am always trying to get them to invest in the markets. If COVID has taught us anything, it's the importance of saving. You can't know what tomorrow will bring, so it's always nice to have some money put aside for a rainy day. So I would recommend, especially when the yields were great on the bonds around last year, I would recommend people, please buy these bonds. They're very liquid assets, so whenever you have a problem, you can sell it back to the bank easily, get your money back, solve your issue, and they're just and they're easy to access, right, when you're initially buying. I would get into the whole primary market, secondary market, but let's leave that alone. They're easy to sell, and you get back your money. And for the people who said that, oh, I don't understand this whole bond thing, I would recommend hassle-free investment in collective investment schemes, because they were prioritizing the preservation of funds and trying to manage the exposure to risk. So I would recommend collective investment schemes or the unit trusts through the providers that you have listed. And always make sure that when you are looking for where to save your money, you have to look at the capital markets website to make sure that these people who are providing these services are listed and are licensed.
All right.
Yeah.
All right. Now I'm starting to earn. Yes.
Yeah.
Okay, let's just say I started yesterday earning some money. What advice would you give me?
Do not you know, in the beginning people feel like I'm making very little money, so what should I can't start saving now. No, but start immediately. The moment you start earning, take, even if it's a 5 or 10% of the money that you're making, just put it aside. Listen to, you know, people are field agents that come and they represent unit trusts. Listen to these people. They do have something to say. And because you could have some little money, it will work well together, because these guys pool the funds as they invest them. So start saving, save consistently, because discipline is what makes it it's what makes it worthwhile eventually.
Should I concentrate on saving first and investing later?
No, you can, as these guys do, right? Saving can be coupled with investments. So you're putting money aside. It's like a monthly contribution that you're making.
I see.
But these contributions are being invested, and a return is coming, and you're making more money at the end.
All right. My panelists have wealth of information pertaining to these particular conversations. Sarah Kataramo, Ms. Ongodia Ayeko, Mr. Alan Reitaba, and Dixon Sembuya. Very good afternoon, Mr. Dixon Sembuya. Let's talk about the future of the industry before I let you go. Paint for us a picture. Mr. Sembuya, paint for us a picture of the investment industry. What does it look like?
Good afternoon once again. And colleagues, once again, allow me to thank you all for your insights. And, thank you a lot for unpacking and breaking down, the whole saving and investing concept, and specifically in this case with regards to collective investment schemes. Now, allow me to also respond to, before I go directly to my question, I'd also like to touch on something that you and Sarah were discussing, and that was on the issue of, saving coupled with investing. I think if you save without investing, the danger is that the value of your money might get eroded. I think price levels rise with time. And so saving without investing might actually erode the value of your investment. So it's important for you to save and invest simultaneously. And the beauty is that with the products that are available, specifically in the collective investment scheme space, you can actually save very little amounts. I mean, you can save from 100,000, 10,000, you name it. So in as far as being able to save and invest is concerned, the entry amounts are low, and almost anyone who wants to save is encouraged, to use this particular avenue to save and invest. Now, on trying to paint a picture for, the collective investment scheme sector or the investments industry, I think the future is bright. We have barely scratched the surface. As I'm speaking, industry has been able to mobilize roughly 500 billion shillings in savings from Ugandans. But we envisage that in the next 3 to 4 years, we should actually be able to double that amount to about 1 trillion shillings. And that will be done through, continuously sensitizing Ugandans on how to save and invest through this particular avenue. So the future looks bright.
All right.
It's important that we cultivate that culture of savings, and the collective investment scheme is an appropriate vehicle in as far as trying to cultivate, that culture of savings among Ugandans. And the beauty about all this is that it has economic implications in the sense that what you save through this particular investment vehicle is actually deployed as capital to stimulate the growth.
All right, thank you very much, Mr. Dixon Semboye. I'm afraid we've run out of time and we still have Mr. Alan Retaba, whose submission we haven't heard. Mr. Alan Retaba is the head of reserves management at the central bank. Mr. Alan Retaba, paint for us a picture, an outlook for the economy. And don't you think the returns that we are talking about right now will be eroded by the rising inflation? Mr. Retaba, take it away. Outlook for the economy, and won't the returns be eroded by rising inflation? In the 1 minute that is left, please expound more.
Romeo. I think this is a trick question. You're trying to blanket me somewhere in between. But I'm happy to say that the picture is very bright. Inflation is likely to stay very low. It is expected to stay within the central bank's band of 5% over the next few years. And I think we saw that in the report that the central bank released in the last couple of days, the MPC report. I think the picture is still positive on inflation, that it will remain low. And that means that investments in bonds will remain a very good investment over the next couple of years. And we have also seen that government is still doing a lot of activities. From where I'm sitting, I see a lot of infrastructure development. Some roads are being done. I see areas of redevelopment. So all these mean that government will still have or need to come to the market to raise financing. And so there are still many investment opportunities for investment clubs, for SACCOs, for individuals to participate in, and these opportunities will not disappear immediately. We also see that the economy is about to pick up. We are hopeful on the post-COVID environment that things will be better. Companies will be able to operate. Many of us will be vaccinated, and that the economy will open up and will get back to a semblance of normality. When that happens in about 6 months or so, we will see that even equities, stocks will do well. Companies will be able to make some money as the economy comes back to life. And so when I look forward over the next 6 to 8 months, I'm hopeful that investing is going to be the game in town. And I will encourage anyone who is interested in doing this to reach out to us to see how we can help them navigate the markets. Thank you very much, Remy.
We've been having largely centered around rebuilding resilience in a post-COVID-19 world. My name is Romeo Bisiku. Special thanks to our panelists, 4 panelists with whom we are compounding on this conversation. Sarah Katuramo, an investment analyst with Gen Africa, yes, asset managers, and also Mr. Ongodia Aiko. He is the CEO and founder of Zeno Investment Management in Uganda Limited. We also did have Alan Retaba, the head of reserves. Yes, there he is. Management at the Central Bank of Uganda. And finally, Dixon Semboye, the Director Research and Market Development at the Capital Markets Authority. Many thanks to the viewers who have been watching this show. Please save, invest the money, and when you get the returns, save them again. Don't eat the money. My name is Romeo Bisiku. Good afternoon.